Good morning. Just on the way to the office, thought I would shoot a quick video and remind you that it is the end of the year. This is a few days before one of my favorite holidays, Thanksgiving. And I'm just thankful to be alive. I'm thankful for a lot of things, but 2 years ago for Thanksgiving, I was in a hospital bed on a ventilator, sucking on oxygen, dying of sepsis, pneumonia, and organ failure. So I'm happy to be here today. But I wanted to just kind of go over some year-end tax planning strategies. I met with my CFO last week, and he said you got to maybe go spend some money, because if you don't, you're going to give it to the IRS. So let me break that down, what that looks like for you and what you can do to save money, even as a W-2 employee. So if you're a W-2 employee, maybe you work for the government, the fire department, police department, school districts, just a regular company. Maybe you work for Starbucks. I don't know. But if you're self-employed, this applies to you as well. But one of the easiest ways to save money on taxes is vehicles. Purchasing a vehicle that's used for the business. So I'm in my 2010 Toyota Tundra. I bought it brand new. I ordered it through the business. I have depreciated it down to a zero value. And in the meantime, wrote off about $53,000 plus sales tax. So close to $60,000 I wrote off. And for that $60,000, I've driven a really nice truck for the last, 7 years. And I really didn't have any intention to buy a new truck. But I'm going to owe money this year for taxes. The company's done really well. And so I have a choice. And maybe you have this choice. See, I'm going to tie this into you as well, but I'm just explaining how it's working in my life. But I owe money to the IRS. Now, I could go buy a new truck. And if I bought the new truck today, I can't get a Tundra because the lobbyists and the politicians got involved and made it to where I can't do what's called a Section 179 on a Tundra. But I can do it on a diesel, on a Duramax. I can do it on a Chevy, GMC, Dodge, Ford. I just can't do it on a Toyota Tundra Crewmax. I can do it on a Tundra extended bed, but not the Crewmax for some reason. I can do it on a Tesla. I could go buy a Tesla today and write it off with the Section 179, which is rapid depreciation. You can write off up to $500,000 at one time. Now think about that. If you can write off $500,000 just like that, if you're in a 50% tax bracket, you just saved $250,000 and you didn't spend $250,000. You're on paper that you bought something. So how does that work for you? How does that work for you as a W-2 employee? Well, you got to have a business first. So you can't do it you can't do a Section 179, and you can't even depreciate your vehicles or write off mileage if you're a W-2 employee using your vehicle to get back and forth to work. But if you simply set up your own business, a limited liability company, in the hopes, in the attempts to make money, you can't do this in attempts to not pay taxes. That is illegal. When you set up the business, it has to be in an attempt to make a profit. You don't have to make a profit, but the business has to be set up for the purpose of making a profit, right? Now, what can you sell? Well, there's lotions, there's potions, there's pills, there's diet patches, there's freaking anything and everything on the internet that you could sell. You could start a business like what Gary Vee talks about, going to yard sales on the weekend and buying other people's junk and selling it online. You can also do a retail arbitrage business. Have you ever heard of that? Retail arbitrage. Well, what that is you go down to Walmart, and I know people that do this. You go to Walmart, you buy a bunch of products that are on clearance, and you turn back around and sell it on Amazon. That's right. People actually do this, and they do very, very well. They buy products from discount stores and then sell them on Amazon, Facebook, Craigslist, and eBay. It's called retail arbitrage. Now, that's a lot of work, but maybe you got time. Maybe you got time for it. There's also the lotion, potions, and pills MLMs that you can join. There's MLMs that strictly deal with the stocks and bonds and insurances. There's MLMs that deal with just leadership training. Not saying any of them are better than the others. There are some that are better than others, but I'm not plugging MLMs right now. But the purpose of what I'm getting at, what I'm trying to get at, is you don't have to know exactly what you want your business to be in order to incorporate the business to get the write-off to save money this year as an employee. So let's say that you decide you want to sell some lotion, potions, and pills. Or let's say you want to join my team, FortressCreditPro.com. You want to join my team as an independent contractor. So maybe you live in Florida. Maybe you live in Michigan. I don't know. California, Oregon, Washington, Idaho. Wherever. And you want to refer people to Fortress Credit Pro. I'll pay you for it. You can set up a business to do that. We pay as much as $125 for credit repair, as much as $25,000 for a debt dismissal program. So you send me one client that enrolls in my debt dismissal program, I send you a check for $25,000. Now, you can do that with the lotion, potions, and pills, but it's going to take a lot more work than just one client. But you decide what you want to do. But if you do want to refer business to Fortress, it's really simple. Send me an email, contact me here through Facebook, through the direct messaging system, and I'll get you the details on that. But basically, it's FortressCreditPro.com/affiliates. So now that you've decided where you're going to send your business, how you're going to make your money, you need to incorporate an LLC. All right, limited liability company. There's lots of companies that do it for you. iCanFile.com, MyLLC.com. You can do it yourself if you want. Just got to be careful with that. I wouldn't recommend that you do it by yourself. All right. Use iCanFile.com or MyLLC.com to do it for you. My favorite states to incorporate in are Wyoming. Nevada used to be one of them. Not so much anymore because Nevada now has a state income tax, even though they say they don't. And they also charge as much as $1,000 now for a simple LLC or S Corp, and you don't want that. So you go to Wyoming and it's $100. If you live in a state like Colorado or any good state like that, Texas that has low taxes or no taxes, go ahead and just incorporate in your own state. All right, I said that. So now that you can figure out what you're going to do, you need to incorporate your LLC. And this has to be done by the end of the year, by the way. It has to be done by the end of the year if you want to have it to impact in a positive way your taxes for 2017. Now, if you just want to do something for next year, that's cool. Do it anytime. But how do you do it? So you set up your LLC through my LLC, iCanFile.com, whatever one you want to use. I don't care. I don't have an affiliate link for them or anything like that. Now that you've set up the LLC, you figured out what you're going to do. You can go purchase something like this car right here that's driving by me. That one right there, that is a Mercedes. It's a $200,000. I don't know why. It's $200,000. Or you can buy this. I'm going to turn it a little bit here so you can see it when it comes by. You could buy that Ford F-150. That qualifies. That Toyota Sequoia qualifies. Now, what needs to happen for it to qualify? Well, for the Section 179, it needs to be over 6,000 pounds gross weight. So Teslas, the Tesla Model X's, pretty much almost all of your SUVs would qualify. Most of your trucks qualify. Unfortunately, the Tundra no longer qualifies. That was a political move on the Obama administration trying to hurt Toyota. But here comes a truck right here. This one would qualify. Right here, this is a GMC, looks like a Denali. That right there would qualify. Yep, that is a Sierra Denali. All right, so now that you know what qualifies, pretty much any SUV over 6,000 pounds, gross weight. So it doesn't have to weigh 6,000, but the gross weight have to be over 6,000. So like right in front of me is a Buick SUV. That would qualify for the Section 179. Now, all vehicles can qualify for regular depreciation and mileage. I'm strictly talking about Section 179, and here's how this works. We'll use the Tundra, for example. If it qualified, which it doesn't anymore, it used to, it'll probably get changed back to qualify. But let's say that I was going to buy a Tundra. It's about $60,000. Now, I could go down right now, buy this truck, $60,000. That's the 1794 version. Leather everywhere. It's got every single upgrade you can possibly want. In fact, the interior on a Toyota 1794 Tundra, believe it or not, is nicer than several of the Rolls Royces I've been in, the Bentleys, the Ferraris, the Lamborghini. Definitely nicer than Lamborghini. That's just hands down nicer than Lamborghini. But it's extremely nice and comfortable, that truck. I drove one last week, and just the way the interior is set up, they did a really good job. So you buy the truck, it's $60,000. If you have great credit, you walk in, 0% financing for 5 years, 0 down. Now think about that. You bought a $60,000 truck, 0 interest, 0 down. How much money came out of your pocket before the end of the year? Because you're going to set up your LLC, and then you're going to purchase the vehicle by the end of the year. You have to take delivery by December 31st. So you're taking delivery by December 31st. How much have you put down? 0. How much money out of pocket? 0. How much did the truck cost you? $60,000. Now maybe you wanted a Hummer. That's $200,000. You don't have to buy brand new. It just has to be new to you. Maybe you want a Tesla Model X. Maybe you want a big Duramax dually or big F350. I don't know. Whatever it is that floats your boat for your business. Remember, legitimate business expense. All right. So if you're simply going to refer business to me for credit repair or debt dismissal, make anywhere from $125 to $25,000 per referral. Don't say this is you can't buy an F-150 or F-250 or 350 if you're in credit repair. But they do have some issues with exotics and luxuries, and I'll talk about that on a different video. But you bought the Tundra at $60,000. Cost you nothing out of pocket, 0 down, 0 interest. You get, in December, a 50% deduction, or $30,000, plus 1/12 of a year. So you're going to take $30,000 and you're going to take your salary, and you made $60,000 last year working at the sawmill or whatever it is. You're going to take that $60,000 or $50,000 or $100,000, whatever you made, and you're going to chop $30,000 out of it. That means that's $30,000 of income that you don't have to pay taxes on right now because of Section 179. Isn't that cool? Now, how much money did the Tundra cost you? Nothing. Nothing out of pocket. So you were going to owe money to the IRS, but because you bought a truck or an SUV or some type of vehicle for your business that qualifies for 179, you get a 50% deduction immediately, plus the sales tax, right? So there's another deduction there, which I highly recommend that you watch one of my other videos on how not to pay sales tax, regardless of where you live and regardless of what you buy. There is a strategy. Airplanes, boats, motorcycles, cars. You don't have to pay sales tax anymore, my friend, if you know how to play the game. So you bought the truck at $60,000. You get a 50% discount. You just saved $30,000. So you took $30,000 right off the top. Doesn't mean you saved the $30,000, but you took $30,000 of taxable income off the top. But you also get 1/12 because technically you owned it in December, If you bought it in November, you get 2/12. Now, what does that mean, 2/12? Well, you get 50% immediately, so that's the remaining 50%, which has to be spread over 5 years. So you take the remaining $30,000, divide it by 5 years. That would be $6,000 a year deduction, right? So you get to deduct 50% immediately and then spread the other 50% over 5 years. So you get to deduct the full 60. So now, if you take the $30,000 remaining divided by 5, that's $6,000 a year. That's $500 a month. So if you bought it this month in November, you get a $30,000 one time plus November, December at $500. So that's $31,000 right off the top. Do you see now why business owners are buying vehicles every 1 to 2 years? When I owned my construction company, I bought multiple vehicles every single year because I got to do the Section 179. Now, let's say that you decide to buy a new truck. You buy it in November and you decide, I'm going to keep it till June and then I'm going to sell it. Are you going to make money on that truck or are you going to lose money on that truck? You're going to lose money, right? But you can literally roll it into another purchase, roll it into another lease. And a lot of people get confused. They think they have to pay back the money. You only pay back the money on depreciation if it didn't depreciate. So if you bought it for $60 today, you drove it for a year, you get rid of it next year, now it's only worth $50. That's a $10,000 loss. You already wrote off, if you kept it for a year, you already wrote off $36,000 in loss. See what I'm saying? So you can actually keep flipping cars and getting new vehicles every 1 to 2 years, depending on your ability to pay, right? But this is why business owners will constantly buy new vehicles. Now, is there other ways to do it? Like the Tundra. Since the Tundra doesn't qualify, can I still buy it and write it off? Yes. I just can't Section 179 it. And the advantage of the Section 179 is you get the 50% deduction right then and there, regardless of how much money you've put out. All right, so that's the cool thing about the Section 179. Marcelo says you could donate it to a nonprofit. Yes, you could. You could. Unfortunately, if you donate that vehicle to a nonprofit, not for profit, you still have the loan on the vehicle. So if you got a loan for $60,000 and then you donated it, you have to pay off the loan to donate the vehicle. Now, could you donate your vehicle that you paid cash for? Sure, but that kind of there's no reason to pay cash for a vehicle on the Section 179 because it kind of what's the word I'm looking for? Not deflates, but negates, I think that's the right word, negates the whole idea of the Section 179 that you're buying a vehicle with no money out of pocket and you're still getting the $31,000 deduction, up to $500,000. You used to be able to, when Bush was in office, you used to get 100%, and it used to be nicknamed the Hummer Law, because that's when Hummers got really popular. Bush created this Section 179 and kind of adapted it and stuff where you could buy a Hummer for $150,000 and get a $150,000 write-off right then and there, right? So what can you do if you want to buy something that doesn't qualify for 179, such as a Ferrari or a Lamborghini or a Rolls Royce or Bentley or Jeep or maybe a Toyota Camry, right? I do talk about exotics a lot because it gets people excited because they're cool cars. But what if you wanted a Toyota Camry? Can you write off a Toyota Camry? Yes. Can you Section 179 it? No, you can't. But you can write it off. Now, you can depreciate the whole thing over 5 years. The max you can depreciate right now is, I believe it's $11,600, but talk to your tax professional. But, I looked at a brand new Camry the other day when I was looking at the Tundras. They're $38,000 fully loaded. So you're never going to hit the $11,000 range anyway. Now, how can you write it off? Well, you can buy it at 0%, 1.9%, 2.9%. If you got bad credit, you're not going to get those rates. You're going to get 27, 28, 29%. but I can fix your credit. I fixed hundreds of thousands of files, deleted millions of items. Doesn't matter what it is, bankruptcies, foreclosures, tax liens, repossessions, we can fix it. All right. Go to the website, fortresscreditpro.com, fortresscreditpro.com, or right here, and someone I'm sure will reply to the link or text in the link for me so you can see it at fortresscreditpro.com, and we can fix your credit. To buy a car, it's usually about a 45-day turnaround to get you from a 27% to a 2-3% interest rate. Mortgages are a 3 to 6 month turnaround. Whether you just filed bankruptcy or not, 3 to 6 month turnaround time. Okay. Cars, it's about 45 days. So fortresscreditpro.com if you got bad credit. If you don't have bad credit, you can buy that Camry at 0% financing, 1.9, 2.9, whatever you want, whatever floats your boat, right? The longer you finance it, the more the interest is going to cost you, which is okay. If I bought a Tundra, I would finance it 7, 8 years, 9 years, 10 years, whatever I could finance it. Don't care about the interest because of my pay down program where I pay it down to $100 and then pay $1 a month for the remaining term. Now, if you buy it, you can depreciate it. What if you can't buy it? What if you want to lease? Now, leasing is the most expensive way to purchase a car. Leasing is the most expensive way to purchase a car. Thank you, Lisa. I appreciate that. FortressCreditPro.com. Awesome. However, does it mean that leasing is a bad idea? It really depends on your financial situation and what it is that you're looking for. I have a friend that has been leasing vehicles since 1977. And every 2 to 3 years, my friend Max gets a brand new vehicle. And he just leases it. So he hasn't owned a vehicle since then. And the business leases it. Now, with a business vehicle, the lease is 100% write-off. I got to move my truck because I'm sitting here in a construction zone. So hold on a second. Saw the guys pull up. I'm going in to get a tax-deductible Starbucks drink. So I just didn't want to park area and block it. So give me 1 second. But with a lease, the lease for a personal vehicle is non-tax deductible. All right, so you can't write that off. The lease for a business, however, is 100% deductible if, here's the big if you're using that vehicle for business reasons or business purposes. Now, can you use a business vehicle personally? Yeah, you can use a business vehicle personally. You just got to keep track of it and don't try to write it off as 100% business expense. It's really that simple. You know, I had a tax professional tell me once, it's okay to be a pig, but don't be a hog, because the IRS slaughters hogs. Now you figure out what she was talking about with that. But yeah, you can write off. I have 2 friends that work for Johnson & Johnson, and they Johnson & Johnson gets them a new car every 2 years. Each one of them. Every 2 years they get a brand new car. And they really don't get to pick necessarily each car. They get to pick what category. But 1 year they're driving an Audi. The next year they're driving a Jaguar. 1 year they're driving a Chevy. It's just whatever the best leases are for Johnson & Johnson. Now, they have to pay taxes on the personal amount, which is approximately 20% of the driving. So if they're in the Audi and they go to the grocery store, they just got to keep track of that mileage, and then they report it on a monthly basis to Johnson & Johnson, and then Johnson & Johnson reports it as income, and then they pay taxes on it. Not a big deal. It used to be kind of a pain in the butt before these apps come out, like MileIQ.com or MileIQ app. I use it. It keeps track through your GPS on your phone. It keeps track of everywhere you're going, and you simply swipe left for personal, right for business, and you can categorize it. And if you're going from home to work, or work to home, or home to the grocery store, or home to the gym, and it detects a pattern, you can click auto classify. Automatically classifies that for you for work or personal. And then each month you get a report, each quarter you get a report, and the end of the year you get a report. IRS loves it. All right, so that's how you can still have a business vehicle and still use it personally. And again, talk to your tax professional to get all the details on this. So you can write off the lease, the full amount of the lease, or a portion of the lease. You can also write off mileage. And here's a cool thing with mileage. It does vary from time to time. I think right now it's close to 54 cents. It was up to 57 cents a mile. So if you went and bought a Toyota Camry and you put 10,000 miles on that car, or maybe 20,000, like what most people do, we'll just do 20,000 times 50 cents, 57 cents. If you did 60, that's what, $12,000 a year write-off. So with mileage, you can't write off the lease payment, you can't write off the interest, you can't write off gas, you can't write off maintenance. You can simply only write off mileage. Now think about that. 20,000 miles times 57 cents, right? So that's what? We know it's 10,000 times 11,400, I think. Now, that Camry only costs $38,000. So if you did the standard depreciation over 5 years, that's only an $8,000 write-off. But if you did mileage, you're at $11,400 and change. If you drove even more than that, it's even more, right? Now, the $38,000 is if you buy a brand new Camry. The code doesn't say it has to be a brand new vehicle. It has to be a brand new vehicle to you. So what if you went and bought a 4-year-old lease return or a 3-year-old lease return Camry? That Camry is going to be half. So instead of being $38,000, it's going to be $19,000. So you buy the $19,000 vehicle and you write off $12,000 in mileage for the next 5 years. That's a $60,000 write-off for a $19,000 vehicle. Do you see how this works? Isn't this cool? You know, a lot of people say it's not fair that the rich keep getting richer and the poor keep getting poorer and the rich get all of the tax deductions. You, my friend, can get all of these deductions that I'm talking about. You simply just got to know the rules and apply the rules and play by the rules. Find out what you want to do. Lotions, potions, or pills? Or simply refer business to me as a company. Set up your LLC, whatever state you prefer to set it up in. Set up a little website. You can get those done for nothing, literally for free, like Wix.com will do it for free. GoDaddy's now doing it for free, and then you pay $5-6 a month in hosting. You can now write off your cell phone because it's going through the business. You can write off a home office expense. You can write off dinners. You can write off your children that are working for you. Instead of giving your kids allowance to do work around the house, what if you paid your kids to work for you? Giving a good example, my daughter's, one of my daughters is moving to Vegas, I hope. Maybe not. But if she did, she would bring with her a 6-year-old son, my grandson. I guarantee you, if my grandson moves to Las Vegas, that little 6-year-old is going to have a job for Fortress Credit Pro. He will be working in the office, maybe not daily, but at least a couple times a week. And for that, I will pay him a reasonable wage. And he's going to do things that are very important for an office environment. He's going to make sure that all the trash cans throughout the office are emptied and there's a new trash bag. He's going to make sure that the shred pile of documents gets shredded. He's going to make sure that all the dishes are put in the dishwasher. He's going to make sure that the napkins are where the napkins need to be. He's going to make sure that there's toilet paper, extra toilet paper rolls. Do you see where I'm going with this? A 6-year-old can do this. Now, obviously, I'm not going to have him coding for me, reading emails, balancing my checkbook. But a 6-year-old can empty trash cans, right? Would you agree? A 6-year-old can empty a trash can. Just like a 60-year-old can empty a trash can. Right now, I pay a lady in her 40s to empty the trash can. Because she comes in every day, cleans the office, empties the trash can, cleans the desks, so on and so forth, does dishes, all that stuff. But if Caden was here, my 6-year-old grandson, she would earn less because he would be doing part of her job. Now, why would I do that? Why would I put my grandson on salary? The reason why is because if I pay him less than $6,500 a year, I get to deduct it, and he pays 0 tax. Isn't that cool? Now, how many kids do you have? Grandkids? Nieces, nephews that you want to support? Maybe you want to help? You know, my wife wants to help one of our, her nephew and nieces go to college. Well, we're not going to just give him money. But if he comes and stays the summer with us, we'll pay him $6,000 to do work around the office. I mean, it's work that we're going to pay someone else to do. But you see how you can do this. Again, I'm not a tax professional. I started this out as simply how to write off a truck, year-end taxing. But you can do this with your kids as well. Maybe instead of calling it an allowance, why don't you call it a salary? You can't do a salary if you don't have an LLC or an S Corp, right? If you're just a W-2 employee, you can't do this. If you're sole proprietor, I don't know if you can do it or not. Talk to your tax professional. But I know if you're an S Corp, C Corp, or an LLC, you can do this all day long. And here's the other thing. It doesn't have to be a kid. My mother is unemployed. I don't know if she's even employable. What if I decided to give money to my mom for some work? When my grandmother was alive, my grandmother did things for me when she was in the nursing home. I'm going to support her anyway, right? Why not have them do something for it to give them a little bit of dignity, a little self-respect? They're earning it. They know that you're not just giving it to them. They know that they're actually earning it instead of just giving them money. And now you get to write it off. And if it's less than, I think a $6,500 check with your tax professional always changes. But if you can write that stuff off, why not do it instead of giving them allowance? Marcelo, do you elect the LLC to be viewed as a corporate? Do you elect for the LLC? I think what you're asking, do I fill out the S election on the LLC to be taxed, not viewed, but taxed as a corporation? And that is yes in 90% of the cases. I'm going to say everything except for real estate where you hold your assets. So if it's an operating account, operations, that's going to be an LLC tax as an S. If it's going to be asset holding, real estate holding, that would just be an LLC, simply an LLC, not tax as an S, because you don't want it as an S. Talk to the tax professional on that. Mark J. Kohler is great with all that information. But you can write off, I'm going to finish this up, but you can write off your vehicles. So you can Section 179 it, get the 50% write-off right then and there. You can do the lease. You can do your standard, which is just the interest, basically, what the car costs you. You can't write off the payment, but you can write off interest. You can write off maintenance, oil changes, and then you can write off mileage. And you really just got to sit down and kind of come up with your spreadsheet with your 4 columns. You know, how many miles do you drive? What's the maintenance on that vehicle? You know, when I buy a Ferrari, I'm not going to do the mileage deduction, right? I'm not going to do 57 cents a mile on the Ferrari. I'm not going to put 10,000 miles on the Ferrari. I might put 3, maybe put 5. So if I did 10, 57 cents, that's $5,700. If I did 5, that's less than that, right? Like $23.50. No, it's more than that, but whatever. $2,600. If I lease the Ferrari, that lease is going to be $3,000 to $4,000, maybe even $5,000 a month. So if I leased it, that's a $3,000 to $5,000 deduction every single month. If I buy the Ferrari, I can't Section 179 it, but I can take the purchase price, spread it out over 5 years. So if I bought a brand new one, which I would not, because I'm not an idiot, I know that car is going to depreciate 50% in the first 5 years. Instead, I would buy a 5-year-old Ferrari that's already depreciated by 50%. So now I buy a $200,000 Ferrari instead of the $400,000 Ferrari. And the $200,000 Ferrari, I saw one last night, has 1,000 miles on it. 1,000 miles in 4 years. Crazy, right? But it's lost $200,000 in its value. Now, how does that benefit me or even you? Well, if I bought a $200,000 car and I get to depreciate it over 5 years, that is a $40,000 loss for the business on paper. That car, after it depreciates the first 5 years, it's not going to depreciate at $40,000 a year anymore. Maybe 10. So now essentially I'm driving the Ferrari for free because I'm in a 50% tax bracket. So if my business loses $40,000, that saves me $20,000, right, in taxes. And so if the car costs me $2,000 a month because I'm not leasing it, it's 4 years old, 5 years old, and it costs me $2,000 a month, but I save $2,000 a month, does the Ferrari really cost me anything to drive it other than gas? I don't know. Do you see why the rich drive these kind of cars and what they're doing with their airplanes, their boats, and their Ferraris, right? Let's see what these comments say real quick, and then I'm going to run inside. Could you sell your Section 175 vehicle? That's a great question, Marcelo, and I would say talk to a tax professional because I know the answer to that, but I'm not going to answer that question. But you are on the right path. You could do that, but I'm going to say talk to your tax professional because the IRS could see that as some fraud stuff in there. So I would say you'd be better off selling it and then just buying another vehicle. But I think you could do it. But I said I think you could. I'm not a tax professional. That's something that you would have to ask somebody like Mark J. Kohler or whoever does your taxes. Thank you so much, Carla. I appreciate that. I am running out of room in the garage, Jason, and that's why that beautiful red Corvette will be leaving to make room for the other car. So, anyway, I'm going to recap this up. It's the end of the year. Everybody's getting ready for Thanksgiving and Christmas. You might want to be doing what the rich do, and that is tax planning of how to save money this year and next year. You know the saying that with the tree, when's the best time to plant a tree? 10 years ago, 20 years ago? When's the second best time? Right now. When's the best time to tax plan? A year ago. When's the second best time? Right now. There's still time this year for you to come up with a strategy to save money. Now, I'm going to give you some ideas. Yes, you can buy the vehicles. That's really simple. All of us, not all of us. I'm learning something about saying all and every and always and never. There's certain words in there that I'm trying not to say. So most of us depend on a vehicle to get back and forth to work, right? Most of us. Some use motorcycles. Motorcycles at 57 cents a mile is a pretty good deal. A Tesla at 57 cents a mile is a pretty good deal, right? Most of us use vehicles, so that's the easiest thing to explain. But what if you don't want a vehicle? What if you want a new four-wheeler or a new side-by-side? Can you write those off? Damn straight. Right? Sure you can. Sure you can. I know a guy right now that lives in John Day, Oregon. He built my bow for me. His name is Darren. If Darren wanted to go buy a new side-by-side, I have no issue with that. Want to buy a new four-wheeler? Knock yourself out. Need to buy a truck to pull a trailer, put the side-by-side on, knock yourself out. You can do it because he's a guide. He builds custom bows for hunters, and he guides hunters in the mountains. And as a guide, there's a couple things you need. Either a horse and mules or four-wheelers and side-by-sides, right? Because if you get a big elk, you're not going to cut it up and haul it out by hand, because by the time you did that, it would be spoiled. So you use your four-wheeler to get it, or your side-by-side, or your horses and mules and trailers, right? That's a legitimate business. What about my friend who lives in Oregon that runs a fishing service? Could he write off a new fishing boat? Yeah, he uses it to make money. As long as you're using these things to make money, you can almost always, Sarah said, almost always write them off. What if you're a firearms instructor? Can you write off your ammo? Sure. Can you write off your guns? Yeah. Can you write off your earplugs? Absolutely. What if let's think of some common just trying to come up with some ideas for you. Because unfortunately we're taught in public education system not to be thinkers, but to take orders, to get good grades, go to school, go to college, regardless of how much it costs, to get a job that you're probably going to hate anyway. What if you wanted to drive exotic cars? Could you write those off? Could you write off buying Lamborghinis, Porsches, Ferraris, Rolls, Audis? Could you write that off? Yeah, you could. I know a guy, his name's PJ. I can't pronounce his last name, so we'll just call him PJ. If you want to check him out, see how he's writing off his exotic cars that he buys. He literally buys brand spanking new luxuries and exotics every few months. Check out exoticcarhacks.com. exoticcarhacks.com. What if watches? What if watches are your thing? Could you write off watches? Luxury, expensive watches like this one. Could you write that off if you wanted to? Sure. Set up an LLC buying and selling fine watches or timepieces. I know people say you can't write off things like that, but you can. If you had a business that literally that was your side business, don't quit your day job. Keep working at the school district or wherever you work. Don't quit your Starbucks job. But you can set up your LLC, taxes and S, in the state of your choice and start writing things off. Like watches, like cars, like guns, like four-wheelers, boats, airplanes, motorcycles, snowmobiles. How do you write off a snowmobile? Maybe you live in an area that has a lot of snow and you want to do a guide service. I have a friend in Lake Tahoe. He's out all the time taking friends and strangers, friends, and showing them the backwoods of the Sierra Mountains. Could he write off his snowmobiles when he's doing that and he's charging for it? Yeah. Why not? Could he write off the trailer for the snowmobile? Sure. Can he write off the truck? His brand new red Ford Raptor that cost him $80,000. Could he write that off? Yes. Do you see where I'm going with this stuff? You don't have to be poor anymore. You don't have to pay more than your fair share of taxes. You simply got to think like the rich, and you got to do what the rich do. And that is the tax plan. So you got a couple weeks before the end of the year. You got like 6 weeks. Sit down and come up with a business. Get it incorporated. For God's sake, don't do it in California. That's the only advice I will give you. Stay out of California and New York. Come up with a business. And it doesn't matter. Maybe it's... I know a guy in San Diego is making $300,000 net. Not gross. Net. And he's got an IQ of like 80. I mean, he told me, he's like, I'm like Forrest Gump dumb. I'm like, well, you're not that dumb. You're making $300,000 net. He goes, but I just love cars. So I started this business washing cars. Well, now he only washes exotics and luxuries and the best of the best cars now. Cars that don't ever get driven. You know, he was telling me he just washed this $4 million Ferrari. And the car doesn't even have any miles. He goes there once a week and he washes a car that has never left the garage. Why? I don't know. Because that's what the guy that owns it wants him to do. So you could figure out anything you want to do. Don't quit your day job, though. Figure out what you want to do and run with it. Make it a legitimate business. You can't do this in an attempt not to pay taxes. That's illegal. But you can do it in an attempt to make your life for you and your family better. And maybe that means you pay less taxes because you're trying to do better. Does that make sense? Hey, I hope you enjoyed this as much as I did today. I got to get back to work. So see you later.